I just wonder whether it's becoming less and less mainstream now to think of this US recession happening.
Yeah, it's a difficult one because you can look at the data and we do a good job at sort of tracking some of the high frequency consumer spending. And one month it tells you that a recession is upon us, and the next month everyone's pushing it back. And I think this volatility is likely to happen. You're going to get a sort of a zigzag type of deceleration down to sort of what I imagine will be an eventual recession around Q4 and sort of the turn of the year. That's sort of the landing zone that we have. Now we watch every single data point. We're trying to track that timing to get it as close to sort of accurate as one can be. But really, I think that that's probably what the markets are expecting, because we shouldn't discount the fact that that thing that everyone has been talking about over the last couple of months, which is credit tightening, that is going to work its way through also in the second half of this year. And we're still working through the long and variable lags that monetary policy has. And I think that that still has yet to show up forcefully. So Q4 for me is the sort of best guess at this moment in time. But like I said, every data point almost changes one's opinion on that.
Well, Viraj, let's assume that you're right in the Q4 assumption around a U.S. recession. What does that imply about rates? What does that suggest about when the Fed may consider actually cutting interest rates? And what would be the trigger for that?
Yeah, usually the sort of almost the Fed cuts come either just before that recession or in line with it. So, I'm sort of, we wouldn't discount the likelihood of a Fed cut this year. I know there's a lot of pushback on that within the markets. And we certainly get a lot of pushback that people don't quite understand why the markets were pricing in Fed cuts. But I still think that that's something you have to put some probability on. So that's how I think about things right now when it comes to monetary policy. I do, see a sort of gradual pause or pivot or, the end of hiking cycles coming through in the sort of summertime, and then sort of looking at when does that first cut come in. For me, again, like I said, Q4 seems fair, turn of the year, and then like I said, every data point almost brings that forward or takes that back. So generally thinking here, this idea that we've seen the bond yield sort of sell off over the past couple of weeks, for me, that's a great buying opportunity. You want to be buying sort of bonds into sort of any sell-offs, because eventually, we are going to get that pivot and we are going to get central banks starting to lower rates in the next 12 to 18 months.
Okay, Viraj. So if we are going to get the Fed lowering rates in the next 12 to 24 months, 12 to 18 months, excuse me, why do you say that investors should avoid shorting the USD?
Yeah, look, this is a great question because sometimes it feels like it's almost like an expectations versus reality. I felt like what happened over the last couple of months was really the expectations around both the timing, the magnitude, and maybe the idiosyncratic nature of this US recession had got a bit too much. So we're starting to see that, right, with the euro unwind, over the last couple of months, more recently, more forcefully, more recently, and you can kind of get a sense that maybe this rest of the world optimism that everyone had on at the start of the year has kind of run its course. So I think that was largely a tactical sort of bounce back in the dollar, which is working its way through. I'm not thinking that the dollar will strengthen all the way into year end. It's really every country for itself on gauging when the timing of this recession happens. But one thing I do have a strong view on is that if the US goes into recession, it won't be an idiosyncratic event. It will likely take the rest of the world down. And that's not necessarily an environment that you want to be short dollar. So don't fall into that short dollar trap has been my message. And I think that's kind of playing out over the last couple of weeks.